Welcome to the Forex Trading Sensei. In this video, we are at Price Action Basics, Lesson 1, Part 2, Candlestick Forms and the Patterns. Very important when you're looking at charts for entries and exits. Take a look now. Welcome to Price Action Basics. This is the Forex Trading Sensei, and we are on Lesson 1, Part 2. We'll be discussing candlesticks and their formations. So on the screen, you would be seeing several different labels of certain kinds of candlesticks. And we discussed candlesticks in Part 1 of this particular lesson. So if you have not viewed that recording, please do so, because I will not be going over those details from Part 1. There are a couple of things I want to touch on before we get into these formations, and that has to do with price. Now, when you look on the right axis here, the vertical axis, you see these numbers, and of course, this represents the price of the euro in reference to the US dollar. That is what this number means. So for example, the current price we're seeing, which is the bid price, which we will discuss the bid and the ask later on, but the bid price you're seeing here in this black box says 1.12812. What that means is that 1 euro would be equivalent to that price in US dollars. So this is what the vertical axis is showing you, 1 euro in reference to US dollars. And of course, we have time on the horizontal axis. So sometimes, if as a new trader, you may not really understand how to calculate the number of pips in a price move. So I just want to show you that quickly so that you'll have a way to calculate the number of pips. So let's just say we wanted to calculate the number of pips from this point. And I'm just going to go to another price point here. Let's say you want to know to this point, let's just say. And I'm just going to move this up so we can see the number clearly. So let's say you were interested in knowing how many pips existed between this level and this level. Very simply, you can subtract them. And there's one little adjustment you need to make in order to do your subtraction. And that would be to remove the decimal point to make it easy to get the right figure. So notice we have, for the Euro USD, we have a price point with 5 decimal points. So in order to calculate the pips, the easiest way is to move the decimal point just before the very last digit. And the reason we do that is because the 5th decimal point really represents a tenth of a pip. So this will be 7/10 of a pip, the very last one. So let's do some calculating very quickly. So we will subtract 11308.0. We're starting there, that's a larger number, and we're subtracting the smaller number from it, which is 11234.7. And that would give us 73.3 pips. So that would tell us how many pips are between those 2 points. Now, in the case of a yen pair, a pair that ends in the yen, for example, this is USD yen. In a yen pair, notice there are 3 decimal points and not 5. So when calculating with a yen pair, we have to do the same process. We're just moving the decimal to the third, just before the 3rd decimal point. So in this case, we will subtract 11200.7, and we will take away the 111475. for 7.5. And that's 53.2 pips. So that would represent the difference between these 2 points. And that's how you can know how many pips are between there. Now, there's one other way that's very simple using the platform itself. On the crosshair tool, once I touch the tool, it looks like a crossbar. Once I touch it, notice it says crosshair. If I left click to select and I drag it, I'm just going to use here as an example, from this point to this point. So I'm left clicking and dragging. So let's say I wanted to know how many pips were between those 2 points. Notice I have 3 numbers that are showing on the screen. I have a 30, then a slash, then 704, a slash, and then a price point, right? So the very first number tells me there are 30 candles in between those 2 points. And the number in the middle, the 704, really represents the number of pips. So you should interpret that as 70.4 pips. So that is what is between, number of pips between from where I started at the top to where I am here at this point. So that's a very simple way, just using the platform in order to get the number of pips. So hopefully that would help you as you're looking to determine your entry points and stop loss and take profit, etc. So here we are on our candlesticks again. So now we're going to go through some of the formations and the message that a candlestick would give you. So remember we mentioned in lesson 1 that candlesticks are a very visual representation of price itself. And so by understanding how the candlesticks are looking and what the message implied is, it can help a trader to understand what to expect in the next sequence of price moves. And that is why we pay attention to the candlestick formations. So on the first one, which is the rising 3 methods, bullish continuation. And also let me just mention candlesticks, and I mentioned it in the first video, but I'll mention it again. Candlesticks originally came from Japan, and they were introduced to the Western world by Steve Nissen. So because of his innovation, we were able to have them included in our trading platforms. And really, I think it's probably one of the most popular trading methods using candlestick charts, simply because it really gives the trader an understanding of what price is actually saying. It's a way to read the mind of the market. So let us go back here. We are number 1, rising 3 methods. It's a bullish continuation pattern. So this means that when you see this pattern, expect price to continue to go up, and it's a continuation of what was happening before. So very likely price had already been moving up, went into this type of consolidation, and then continued higher. So the pattern includes these 5 candles here, the first one being a strong bullish candle, then 3 bearish candles, and then a bullish candle. The second bullish candle should close very close to the high of this pattern. So it should close very close to the top of this, which it has. So this is the rising 3 methods. And of course, there's the bearish counterpart, where you would see a setup, and instead of it being green, red, green, it would be a red candle coming down, followed by 3 green candles going up, and then a red one coming down. So that one will give you the falling 3 methods, which is a bearish continuation. So just remember that this bullish continuation pattern has a bearish counterpart, where this candle would actually be red in a downtrend like this one, followed by 3 green candles going up, and then another red one coming down. So if you see that happening, then you're getting the bearish version of this 3 methods, rising 3 method pattern. The next one we want to look at is called a spinning top, which is indecision. And it looks just like this one in the middle, has a very small body. The body could be either color, green or red, but a small body or short body with long wicks top and bottom. Usually the wicks, you would see them almost the same height, top and bottom. Doesn't have to be, but very often they will appear that way. And it represents indecision. The market is not sure which way the price is going to go next, which is why it closes very close to the opening price. The next one we have is the bullish engulfing. It's a 2 candlestick pattern, and it involves these 2 candlesticks here. And if you notice, you'll see the green body engulfs the body of the red. It completely swallows it, so to speak. So this is green, this is red. When you see this kind of formation, and you're looking for this exactly or close to support level, right? So these patterns, you want to make sure, especially this one, since it's going to be a turning point, this is a reversal pattern. So this pattern, you will look to see it close to support, which we will discuss in lesson 2. So this is a place where price would be turning to go up. So it's called a bullish engulfing pattern, and usually 2 candlesticks. The second one, which is the green one, will be bigger than the body of the red one. So the green body is larger than the red body. Let us go now to pattern 4, which is a bearish engulfing pattern. 2 candlestick pattern, and notice the red body, the second one, is engulfing the first one, or it has engulfed the first one. So when you see this formation, usually at a resistance level, then you should expect price to go down from there, and it did. Right? So this is the bearish engulfing. So this is the opposite of this one. So number 5 is the morning star, which is bullish, and it's a 3 candlestick pattern. So it involves this candlestick, this one, and this one. So these 3 candlesticks, I like to call it a U-turn, because you see price coming down and then it turns and starts going up. Usually you'll find this at an area of support, this U-turn. And one other feature I want to clarify, this candlestick in the middle usually will be further away from this candle. So there'll actually be a gap. So this candle in the middle would actually be lower down. The body of it will be lower down. But sometimes, and many times, you will see variations of that. You won't see the distance between, but if you see the distance between the two, then it certainly is the classic morning star pattern. But this is what I would call a variation of it. So when you see it, you should take note of it. This is a reversal pattern, and it's a bullish pattern. So price is going up. So from there, here we have another example of a bearish engulfing pattern, which is number 4. Notice we have a very strong bearish candle engulfing this bullish candle. So this is another example of the bearish engulfing. And this particular formation has some other key points to it. Notice we have 4 candlesticks, alternating colors, green, red, green, red. And this actually represents a double top. It's a chart pattern, which we will get into in a later video. And a chart pattern usually signifies a reversal in price from a bullish move to a downward move. So our bearish engulfing pattern is actually part of this double top formation, which is again a confirmation that price could be turning, and it did. So let us go now to pattern number 6, which is a piercing pattern, which is bullish, and it involves these 2 candlesticks right here, the red one and the green one. And the characteristic of this pattern is that this candlestick here, notice it is not, the body of it is not exactly as tall as the red one, but it has certainly passed the halfway point of the body of the red. So that's why it's called a piercing pattern, because the height of this body is more than half the halfway point of the red one. And this is a bullish pattern. As you can see, the price went up from there. Let us go now to number 7, the long-legged doji, which is this single pattern candlestick here. And this candlestick represents indecision. Usually dojis don't have very long shadows or wicks top and bottom, but this one is called a long-legged doji. It does represent indecision, but many times you will see it in conjunction with other patterns. You will see it as a turning point, right, which is what you see here. So here we have a bearish candlestick, a doji, and then we have the green candle here. So this actually represents or mimics the morning star, bullish pattern. This actually looks like it, except the center candle is a little bit different. But it gives you the same message that price is likely to turn and go up. So this is actually a bullish pattern. These three together, but the long-legged doji is the one in the middle. So this is just an example of the doji in conjunction with other candlesticks to give you a message. Let us go now to mirror bars. I just want to touch on this. You may not see it in every book that you read, but mirror bars are basically two candlesticks adjacent to each other with alternating body color. So one is red and one is green. And usually it will indicate a reversal in price. And you can see it reversed as well, coming from a high point to a low point. So you'll see a green one and then a red one. Okay, so the green first and then the red when it's coming down, the red first and then the green when it's going up. Then we have number 8, a shooting star. And we also have number 9, a hammer. So those two we're going to discuss together because they are very much related. Let me start with number 8. And this is a shooting star. It's an individual candle and it's bearish. It's usually found at the top of an up move. So let's say you have price trending up and it begins to get weak, you would start seeing these kind of candlesticks forming. So the shooting star is bearish. From this point, you should expect price to start dropping. It may not drop instantly, but at least it's letting you know that price is getting weak. Now the flip side of this one is the hammer. So the hammer, as you can see, it looks like a hammer. It has the body, small body at the top, long wick at the bottom. So this shooting star is actually the hammer flipped over, right? So when you see the hammer at support, it is a bullish indication. Okay, so that hammer goes up and the price you expect to follow the hammer is an upward move. Now there are two candlesticks I want to include here in the description. And one of them is the inverted hammer. So I'm going to type that in because they happen very often and you need to be mindful. The inverted hammer. And I'm going to make it green. It is a bullish pattern as well. And it looks like this. It looks like a shooting star, but it's found at support. Okay, so let me just edit this so you'll have this for review. Let's just edit this. So it's an inverted hammer. Looks like shooting star, but at support. So you would see sometimes, instead of seeing a hammer, you will see a candlestick that looks like this, but at a support level where price is ready to turn. That is also a bullish pattern, a bullish candlestick. And the other one you would see, they call it the hanging man, and it looks like the hammer. So I'm just typing this in, so you'll have that as a reference as well. Looks like the hammer. But it's found at resistance, which is where you would find a shooting star. So those candlesticks you really need to pay attention to because they come in very, very often in the chart. And when you see them, they usually give very clear indications of where price is heading next. So we have the hanging man. Looks like the hammer, but at resistance. And it's bearish, which is why I've colored it red. So the hanging man looks like a hammer, but it's found at resistance at the top of a run. And when you see it, it's usually a sign that the price is getting ready to go lower. So really and truly, these two candlestick patterns actually give you 4. So you can have a hammer which looks like this, or you can have an inverted hammer at the support level that looks like this. Or you can have a shooting star, which actually looks like this at resistance, indicating a bearish move. Or you can have the hanging man, which looks like the hammer in this position at the top of a move, indicating price is ready to fall. The next we have some indecision candles. Notice these candles I've highlighted in blue, starting with this one, going to this one. They're very short bodies. Some of them have no bodies at all, meaning that price opened and closed exactly the same point. This one is also a very tiny candle, but I'm really focusing on these two and these two. Okay, these are really indecision candles called dojis, and you would find them on charts when the market has not really decided which way next. So you will see these candles, and you can find these on daily charts as well. This is an hourly chart. All of these patterns would show on any time frame. Let us go now to the final one I have on this video, which is number 10, the dark cloud cover. This is actually the opposite of the piercing pattern. So in the bearish dark cloud cover, notice that this candlestick body has crossed the halfway point of the green one, right? So this is a bearish indication. So when you see these patterns form, then the next price move, you're looking to see or get confirmation from your trading method as to when to get into the trade in the direction that this pattern is indicating. Now, there are many more things that traders use to make decisions in order to get into a trade. So not because you see a candlestick pattern means you're going to click immediately. You still need confirmation. So candlestick patterns and their messages should be part of your trading decision-making process or your technical analysis in conjunction with many other factors to give you the best probability of the price going in a certain direction. In our next video, which will be part 3, we will be discussing price action as far as it relates to trends using candlesticks. So we will define trends and get into a little bit of information there. Then we're going to go into lesson 2 and get into market structure and support and resistance. So looking forward to having you review those videos as well. If you have any questions or comments, please feel free to post below this video. Also, if you would like to be notified when we have other videos posted, be sure to subscribe, because we have a lot of videos that are coming on different topics that we think will be beneficial to you as a trader. So until our next video, have a great day and trade well.